What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I hope everyone had a great Thanksgiving. I hope everyone's safe out there. I made some changes to my M1 Finance dividend portfolio. By the way, make sure you smash that like button. And some of the changes I made to my dividend portfolio, there were some things that I capitalized on with some stocks that were way down that will eventually distribute their dividends again. But the real estate sector is way down, and I had to capitalize on a few things. So I made some changes real quick. I did some sells recently. I'm going to show you my activity. Actually, I did it today. So I bought 10 stock. I sold 3 stocks, and I bought basically 10 stocks real quick. So why did I sell Starbucks? Why did I sell Delta? And why did I sell Real Assets Income Fund? So one of the things with Real Assets Income Fund, I would treat that is kind of like a retirement pension. Like you put a bunch of money in, you reinvest. I'm probably going to throw that in my E-Trade dividend portfolio. It's just a really good income fund that it's definitely for passive income. It's something that you just park, leave it alone, reinvest, let it work its magic each month. And, that's probably something that I'll do maybe 2 or 3 years down the road, put it in, let it reinvest, go from there. I just, I need to be more aggressive. So I'll show you what I did. Delta Airlines, I sold, it was down, it's up. I'm going to buy it again. It's almost a guarantee that I'm going to buy it again. Okay. It's just not the right time. It's not the right time to capitalize on it. Starbucks, I need way more money. Once I start racking up, like 200, 300, 400 a month on my M1 Finance dividend portfolio, then I'm going to start putting it in Starbucks. It has increased its dividend. I just need to get to that 25 shares rule, and I just have, kind of way too many stocks. Like I said before, I went way too fast into it. If I had like $30,000 and I had $1,000 each in it, okay, different story. But I just had to make some changes and make some adjustments to my portfolio, and I may pay for it with taxes. I already picked up a ton of shifts. I looked at my how much I earned this year from picking up, and I do have an exam coming up tomorrow. Biostatistics sounds like fun, but the good thing is set the tone early, just like your dividend portfolio. You set the tone early, and then you let the everything catch do its job, or you do the job. When you set the tone early, that makes a big difference in exams or your dividend portfolio or anything. So I can get like a 65%, still get a B. So I don't want to get to that point, but you get what I'm saying. You set the tone early for your portfolio or whatever project that you're doing. That way you don't have to sweat bullets last minute, and you're just reviewing, you're just saying, okay, this does this does this, just like your stocks. So I bought the stock Omega Health Investors. Okay, this is a stock, a real estate investment trust that obviously is a healthcare real estate investment trust. It distributes right around a 5% or more dividend, okay, with its history. And it's basically a stock that's it's kind of stagnant. It's kind of like First Energy when I did a video. Again, I'm not a fan of First Energy. I don't like to get my emotions into things, but you just can't say no to energy stocks like this. And let's see, let's just go back there. A 7.23% dividend yield with a stock that is way down, that will probably improve itself over time. And once the vaccine comes out and starts getting distributed, confidence is going to be way up. So percentage wise, let me just show you my holdings. Okay, I have IIPR, I'm hoping that can eventually go down to 1% and I can start buying more shares of IIPR. I'm actually, I got it way low. Again, the nice thing about marijuana stocks is they may go down, okay, but IIPR still makes money because they're paying rent. It's a real estate investment trust. They have to give money back to investors. So it's still a very strong stock and it gives off a very nice dividend. Pfizer, I have 16.95 shares. QYLD, 25.65 shares. Coca-Cola, I have 11 shares right now. AT&T, 19. SPHD, I have 14.98. LTC, 14.32. I need to get a little bit more in these so I can start getting these monthly dividend stocks kicking in. That's kind of why I put them as part of the primary with my dividend portfolio, because my goal is to make $1,000 to $3,000 a month on my monthly dividends and $2,000 to $4,000 on my quarterly dividends. So once these start reinvesting and start distributing more money, then I can start buying more shares in these guys. So I want these guys, these two, well, actually the three, and then Pembina to set the tone for everything, as well as Gain, AGNC, and SCM, which is a pretty nice business development company, which is very rare to see one do pretty well and not be hit hard. Business development companies are a big risk, but they have to pay investors a certain percentage, or else they have to pay taxes and stuff like that. So there's kind of a loophole that they do. So that's why they distribute a nice dividend. Gain is doing well. I'm glad I have a lot of shares in them, and I will continue to reinvest in these guys so that they can give me a monthly dividend stock, and hopefully they increase from 7 cents a share to 8 cents, which would be fantastic. I think they will over time, which means I can buy more of these guys because of this. So then, you're starting to see where I'm going. The compound interest is kicking in, and the future is bright with a lot of these stocks. Each $10,000 I have, I'm going to add a sector. So right now, I have the real estate kind of BDC sector. Iron Mountain, I just bought some of these guys. I need to get to at least, I want to get to maybe 50 shares and I'll feel really good. It's just a very good real estate investment trust. I may do a stock and dividend analysis video on these guys, but things are so strong with it that they'll distribute more dividends for me in the future. So I feel very confident with these guys and their capabilities. So really I just wanted to be brief with the Death Star dividend portfolio. I just wanted to show you some changes I made. Again, these stocks, I'll tell you why I bought them. Fastenal, I need to diversify. British American Tobacco and Altria. Unfortunately, people don't care. They're going to smoke. It is what it is. I mean, I can educate people as much as I can at being a registered nurse, like knock it off, but they don't care. I mean, they crave cigarettes. I mean, geez, I can't even tell you people who I've met over the years or I know that are candidates for open heart surgery, and they're smoking when they get home. They don't care. Even after open heart surgery, they'll do it. And I mean, I don't get it. I mean, but it's their choice, and these guys are capitalizing on them. And Philip Morris is also in my radar to get. First Energy, these guys are like an empire. So, like I said in my previous video, check that out with my First Energy video, please. Why I bought it. I can't stand these guys. I really don't as a company, but they're like an energy empire. I mean, they make so much money from people in apartment complexes and all this. They're just, or houses. You are pretty much a slave to these guys in this area, and their revenue has increased. Their dividends have increased over time. You just can't say no to them. Now, here's the thing about Pfizer. I did a video on Moderna versus Pfizer, and I compared kind of these ones. Moderna is just kind of like vaccines, so they're going to be high, but they go back down. Pfizer, sure, they may have a vaccine, but don't forget they have chapstick. They sell other products like Centrum. They're very well diversified with a lot of their products. They sell steroids like corticosteroids. I may do just a video, a follow up with Pfizer on some of their products that they have because, I mean, they don't just rely on vaccines. They're an empire. They own a lot of stuff. They sell a lot of pharmaceutical products or pills, and they're not going anywhere. A lot of these things are in demand. People that have AFib, people that have COPD. So there's a correlation right here. Remember, correlation doesn't cause causation, but right here, and even here sometimes that these are there could be a correlation because Pfizer gives off steroids. People that have COPD from smoking, right here and here, they get steroids when they come in the hospital because they don't care. They're going to smoke. Unfortunately, these people with COPD that got COVID, they're in bad shape or non-compliant. Right here, steroids at discharge, steroids in the hospital. So you're kind of seeing where I'm going, people taking multivitamin. I love Centrum as a product. So that's the nice thing, right, that's going on here. So you're starting to see all this stuff. In Hormel Foods, I always do like a ritual, like before I go for exams, I go to this one, I go to Penn Station, like the day before I take an exam. I've done well the next day in an exam. And guess who all their meat and stuff is? I saw Hormel Foods. And even in the hospital, Hormel Foods, one of the things that they have in the hospital that help people are thickeners. Hormel Foods actually has thickeners that people mix for foods so they don't aspirate or get pneumonia. So Hormel Foods is very well diversified as well. That's one of the reasons why I have them. And the thing is, a lot of people are worried about Iron Mountain, this and that, and these and those. Iron Mountain's starting to adapt with the cloud system and with medical data and everything. So what people used to do is we used to hand, write our notes and give it to people like Iron Mountain that store medical documents for a long time, and then they charge, people to have their supplies, or I'm sorry, not supplies, but paperwork over there, medical documents. They're converting to like more like cloud-based and stuff, basically. So they're not going anywhere. They're just going to be stronger. And again, they're a real estate investment trust. Usually real estate investment trusts increase their dividends over time, unless they're, a mess, or if they're really small and they try to get on their feet and it's just too late, like what happened with my rich uncle's portfolio, the bricks rate. But the good thing is, I may have taken a hit with my rich uncle's. Make sure you check that one out in my video section as well. See the tragedy that happened, but because I'm well diversified, I have these guys, I have Fundrise, I have E-Trade. What the hell do I have to worry about? I'll gain that loss over time, so that's the great thing about dividend investing, diversifying, not having all your eggs in one basket. And also, let's just see, adapting and changing. Okay, so that's the one thing as well. People are adapting, companies are adapting, and you just have to capitalize on opportunities with certain stocks. So that's basically what I have to say on Monday. Hope you guys are safe out there. I hope you enjoyed this video. And, I'm going to plan on making one tomorrow. Probably a quick stock and dividend analysis and some changes I made to my E-Trade dividend portfolio, which I'm excited about. And let me know what you think. And you guys enjoy your Monday. Hopefully your week is okay and you guys are safe, and have a good one.